All right, so we're diving into British American Tobacco's latest earnings call.
BAT, for those who don't speak acronym.
Exactly, BAT. It's their Q4 2024 results. And, well, it's a little puzzling, to be honest.
How so?
They met expectations for the year overall,
Okay.
but the stock actually dipped a bit afterwards.
Yeah, that's never fun for investors.
Nope. So, what's the deal? Are they in trouble, or is there something else going on?
Well, it's kind of a classic transition story. You see, their traditional cigarette business, that's shrinking, as expected.
Makes sense. Everyone's heard that story.
Right, but here's the thing. They're new category products.
New category. You mean like...
Exactly. Vaping, heated tobacco, all those modern oral nicotine products, that stuff's growing like crazy.
So that's the bright spot.
That's where BAT's future is, and that's what investors are really watching.
Okay, so new categories are key. Got it. Let's dig into that a bit more. What's the breakdown there? Which of those new categories are doing well and which ones are, lagging behind?
Well, modern oral, that's the superstar right now.
Modern oral, okay.
Fastest growing globally, and BT's Velo brand. That's leading the chart.
Velo, yeah, I've heard of that one.
It's doing well across the board, but the U.S. market, that's especially hot.
The U.S., really?
Yeah.
Because I thought BT's been having a rough time in the U.S. lately. What's changed?
They've been pouring money into their U.S. operations.
Okay.
Focusing on brands, distribution, the whole 9 yards.
It is paying off.
It seems like they're starting to recover some of their volume and value share.
That is encouraging. But come on, they're not out of the woods completely, right?
Yeah.
What about all the illegal vaping products flooding the market? That's got to be hurting. No.
Huge headwind, absolutely.
Yeah.
BT's pushing for tighter regulations, tougher enforcement.
Right.
But it's a tough fight.
Yeah.
They're hoping the new administration will crack down harder on those illicit vapes, but, well, we'll see.
Fingers crossed. So modern oral is booming. Vaping's got its issues. Where does heated tobacco fit in all this?
To be honest, heated tobacco's been a bit of a slow burn for BT. Maybe a little, but they're not giving up on it. They've got this brand new platform they're launching.
Oh, yeah.
Called glow-heelow. And they think it's going to be a game changer.
Glow-heelow. Okay, I'll have to look into that. So are they basically saying, hey, we're not just going to sit back and let the market dictate our future?
Exactly. They've totally revamped their whole innovation system.
Oh, wow.
Got a pipeline full of new products set to launch throughout 2025.
Sounds ambitious.
It is. It's a bold strategy, but they're being smart about it.
Yeah.
They're focusing their investments on the categories with the highest profit potential and keeping a really tight rein on their ROI.
Smart move. You can't afford to just throw money at every shiny new thing these days. So all this innovation, all these new categories, is it enough to offset the shrinking cigarette sales and actually drive overall growth for them?
Well, that's the million-dollar question, isn't it? They've set some pretty aggressive midterm growth targets for 2026.
Like what?
They're aiming for 3% to 5% revenue growth.
Okay.
And 4% to 6% operating profit growth.
Not bad. But I'm guessing there's a catch.
There's always a catch, right? These targets, they factor in some pretty hefty headwinds.
Headwinds meaning?
Meaning trouble in a couple of key markets, Bangladesh and Australia.
Uh-oh. What happened there?
Both countries really hit BAT hard in 2024 with all sorts of regulatory changes and excise tax increases.
Ouch. That's got to sting details, please.
Okay, so in Bangladesh, they got slammed with this surprise increase in VAT and supplementary duty on over 100 essential products.
Including tobacco, I'm assuming.
Of course, tobacco is always a target. And on top of that, there were excise tax increases, floor price increases, the whole shebang.
Wow, they really piled it on.
Yeah, and BAT is expecting all this to lead to a surge in illicit trade, which is never good news.
A surge in illicit trade. That's just adding insult to injury.
Yeah.
And what about Australia? What's the story down under?
Australia is a whole different beast. They're bringing in these sweeping new tobacco regulations in April.
April 2025.
Yep, biggest reform since they introduced plain packaging back in 2012.
Wow, that was a long time ago.
I know, right? And these new regulations, they're probably going to speed up the decline of the legal cigarette market.
So, not good for B8.
Not ideal, no.
So they're facing some serious challenges in these two markets. What's their plan? Are they just going to try to ride it out and hope for the best?
They're not giving up on those markets, that's for sure.
Good.
They're still profitable there.
Okay.
But they are adjusting their strategies.
Makes sense. So what's the new approach?
Cost optimization, premiumization, and they're also exploring new opportunities within the legal framework.
So basically they're trying to play the long game, adapt, and find ways to thrive even with these headwinds.
Exactly. They're not backing down.
Impressive. But it must be putting a lot of pressure on their financials, right?
You'd think so, wouldn't you?
Yeah.
But here's the surprising thing.
Hit me.
Despite all these challenges, BAT is still fully committed to returning cash to their shareholders.
Really? Through dividends and share buybacks?
They're not cutting back.
Nope. In fact, they just finished a $700 million buyback.
And they've got another one planned for this year, $900 million.
Hold on, let me get this straight. They're dealing with falling cigarette sales, regulatory crackdowns left and right, economic uncertainty all over the place, and they're still prioritizing shareholder returns. That's a bold move, to say the least.
It definitely shows confidence, right?
Yeah. But is it misplaced confidence?
Well, it reflects their belief in their ability to generate strong cash flow no matter what's happening around them. They're projecting over $50 billion in free cash flow between 2024 and 2030.
$50 billion. That's a staggering amount of money.
It is. It gives them a lot of leeway to invest in those new categories, manage their debt, and keep those shareholders happy.
It's like they're trying to walk a tightrope.
A very profitable tightrope.
All right, so we've talked about their global performance, their strategy with these new categories, their financial strength, all that good stuff. But let's zoom back in on the U.S. market for a second. We touched on it earlier, but I really want to understand what's driving their recovery there and what the biggest hurdles are that they're still facing.
Okay, let's unpack that a bit. You're right. The U.S. is crucial for BAT, and they've been investing heavily there, especially in their combustible brands and distribution network.
Combustible brands. You mean there's still putting money into traditional cigarettes in the U.S.? I thought they were all about new categories now.
It's not that simple, remember. The U.S. is a huge market, and combustibles still make up the bulk of their profits. They can't just ditch that overnight. It's more about managing the decline of combustibles while building up their presence in new categories at the same time.
That makes sense.
Yeah.
So what's their game plan for traditional cigarettes in the U.S.? Are they just trying to squeeze as much profit out of them as possible, or are they actually aiming for growth there?
It's more about stabilization than growth, really.
Yeah.
Their focus is on premiumization.
Premiumization. What's that?
Basically, offering higher quality, more expensive cigarettes to a specific niche market.
Ah, so appealing to a certain type of smoker.
Exactly. And they're also putting a lot of effort into their distribution network.
To make sure those premium cigarettes are available everywhere.
Exactly. They want to have a strong presence in all the key retail channels.
Okay, got it. So premiumization and distribution are key for traditional cigarettes. What about the new categories, though? How are they performing in the U.S.? We talked about Velo Plus doing well, but what about vaping and heated tobacco?
Vaping in the U.S. is, well, it's a bit of a mixed bag, as we mentioned before.
Right, the illegal stuff.
Exactly. That black market is a major problem, really hurting legal companies like BAT.
Yeah, we talked about that. And they're pushing for stricter enforcement, right?
They are, but it's an uphill battle.
Makes sense. So vaping's a bit shaky.
Yeah.
What about heated tobacco? Is that gaining any traction in the U.S.?
It's been a slow climb so far.
Really? Why do you think that is?
It seems like U.S. consumers are just more into vaping and modern oral for now.
Oh, interesting.
But BAT is hoping their new glow-heelow platform will change that.
The one they're launching later this year.
Yep, they're planning a big launch, and they're confident they can grab a decent chunk of the market.
So they're going all in on glow-heelow in the U.S. It sounds like they're throwing everything but the kitchen sink at the U.S. market, trying to turn it into a real growth engine for the company.
That's one way to put it. They see huge potential in the U.S. despite all the challenges.
But they're not the only ones, are they? There's got to be some serious competition from other tobacco companies, not to mention all the newcomers in the nicotine space.
Oh, absolutely. Competition is fierce.
But competition can be a good thing, right? Keeps everyone on their toes.
Absolutely. It drives innovation.
So BAT can't afford to rest on their laurels.
Not for a second. They need to keep innovating, keep investing, keep adapting.
Just stay ahead of the game.
Exactly.
Okay, so quick recap. BAT's facing shrinking cigarette sales, but they're aggressively going after growth in those new categories: vaping, heated tobacco, and modern oral. They're pouring money into innovation, especially in the U.S., and they're determined to keep those shareholders happy.
You got it. But there's another piece of the puzzle we haven't touched on yet.
Ooh, and that is?
The whole issue of regulations and litigation. BD's facing a bunch of legal challenges around the world.
Uh-oh, not good.
No, it creates a lot of uncertainty for the company.
Okay, let's talk about that. What are the biggest legal headaches they're dealing with, and how is it impacting their business?
The one that's been making headlines is this long-running battle over cigarette liability in Canada.
Oh, yeah, I vaguely remember hearing about that.
It's been going on for years.
Wow, that's a long time.
It's been a huge distraction for them, not to mention a financial drain.
Any end in sight?
Actually, yes. There's some good news on that front.
Oh, tell me more.
They've finally reached a proposed settlement in the Canadian case.
That's great news for them, right?
It is. It takes away a lot of uncertainty and lets them focus on their core business.
So what's the damage? How much is this settlement going to cost them, and how are they going to handle it financially?
They've set aside a big chunk of money to cover it, but they're being pretty secretive about the exact amount.
Playing it close to the vest.
Exactly. They've also adjusted their reporting to exclude most of their Canadian operations from their adjusted operating profit.
Interesting. So they're basically trying to separate the Canadian situation from the rest of their business, giving investors a clearer picture of their underlying performance.
Precisely. They want investors to focus on the core business and their progress on transitioning to new categories, not get bogged down in the Canadian saga.
Smart move. So Canada's sorted, but what about other legal challenges? Anything else brewing that we should be aware of?
Well, there are always legal challenges for a company like BAT.
True, they're a big target.
They're constantly getting sued by individuals, governments, NGOs, you name it.
Part of doing business, I guess?
Pretty much.
Yeah.
But there's nothing on the scale of that Canadian case on the horizon right now.
That's good news.
Okay.
So they've got a handle on the legal front, they're investing in new categories, they're generating tons of cash flow. All sounds pretty positive, right?
On paper, it does, but there are always risks in business.
Of course, nobody has a crystal ball.
Exactly. We've already talked about those challenges in Bangladesh and Australia.
Right.
And there's always the possibility of surprise, regulatory changes, or, the economy taking a downturn.
True. But overall, it sounds like BT's in a decent position for the long haul. They're a global leader in an industry that's undergoing massive change, and they seem to be taking the right steps to adapt and thrive.
I agree. They're a company to watch for sure. They're not afraid to make big moves, and they're always pushing the boundaries of innovation. It'll be interesting to see how they evolve over the next few years.
All right, so we've covered a lot of ground here. We've talked about their global performance, their new category strategy, their financials, the U.S. market, the whole legal and regulatory landscape.
We've been busy.
It's been a pretty comprehensive deep dive into BT's business, wouldn't you say?
I'd say so. We've gained some valuable insights into their strengths, their weaknesses, and their ambitions. It's a complex and fascinating story, and it's definitely not over yet.
But before we move on, let's take a minute to recap the key takeaways for our listeners. If they only remember 3 things about BP after listening to this, what should they be?
Okay, good question. My top 3 takeaways would be, first, BT is in transition.
Right, moving away from traditional cigarettes.
Exactly. They're shifting towards new categories like vaping, heated tobacco, modern oral.
Got it. Transition is key takeaway number 1. What's number 2?
Second, they're financially solid.
Solid how?
Strong cash flow, managing their debt well, and they're committed to giving back to shareholders.
Okay, strong financials, that's number 2. And number 3?
Third, BT is a global player with a diverse portfolio.
Not just cigarettes anymore.
Nope, they're a nicotine company now, with a presence in multiple categories and markets.
So diversification is their strength.
It gives them some protection against market swings and regulatory changes.
Excellent summary. I think those 3 takeaways really capture where BT stands right now and where they're headed in the future.
I agree. They're a company in motion, that's for sure.
Well, that brings us to our final segment for today, the part where we put on our speculative hats and let our imaginations run wild.
Time to get creative.
Exactly. Let's have some fun with this. Any crazy but plausible trade ideas that come to mind based on what we've learned about BT?
Oh, I've got one. What if, seeing the success of companies like Tesla branching out into different areas, BT decided to leverage their battery technology from vaping devices and develop electric scooters?
Whoa, that's an interesting one. Vuse-branded electric scooters zipping around cities, powered by the same tech that's in their vapes. That's a pretty cool image.
Right. They could even do a subscription service, like you get a new scooter every year with your Vuse pods.
I like it. It's like a perfect synergy between their existing expertise and this booming market for micro-mobility solutions.
Exactly. They could become the cool tobacco company.
Appealing to a younger, more eco-conscious crowd.
Exactly. The ones who are ditching cars for electric scooters.
It's a long shot, I'll admit, but it's not totally out there.
Stranger things have happened.
Okay, I've got one. What if B8, with all their experience navigating these crazy regulatory environments around the world, decided to create a consulting arm for companies in other industries that are facing similar challenges.
Ooh, that's a good one. So they'd be like, hey, we know how to deal with regulators. We know how to build a science-backed argument. We know how to navigate all this complex legislation. Let us help you.
Exactly. They can become the go-to experts for companies trying to manage risk and build trust in this world where regulations are getting stricter all the time.
Think about it. Food companies dealing with sugar taxes, tech companies grappling with data privacy, even the whole psychedelics industry trying to figure out this uncharted legal territory.
BAT could be their Sherpa, guiding them through the regulatory jungle.
It's a perfect fit. They've got the experience, the expertise, the global reach. It could be a lucrative new revenue stream for them and a way to diversify beyond just nicotine.
Okay, we're on a roll now. Here's another one. What if BA, seeing this whole trend towards personalized nutrition and wellness, decided to use their scientific know-how and data analytics to develop a customized nicotine delivery system?
Whoa, hold on. That's next level.
Okay, hear me out. Imagine a subscription service where you give them your DNA, your lifestyle data, your nicotine preferences.
Okay, I'm listening.
BA then uses all that information to create personalized nicotine pouches or lozenges, whatever you prefer, with flavors tailored to you, different strengths, even added ingredients like vitamins or nootropics.
It's like Nespresso for nicotine.
Exactly.
Offering this premium, individualized experience.
Catering to your specific needs.
They could even team up with wearable tech companies, track your biometrics, adjust the nicotine deliver in real time, create this closed-loop system.
Optimize satisfaction and reduce harm.
Exactly.
They can market it as a biohacking tool.
For people who want to manage their energy, their focus, their mood using nicotine in a controlled way.
Of course, this is all totally hypothetical.
Wildly speculative.
But it's fun to think about the possibility.
It is. And it wouldn't be the first time a tobacco company did something completely unexpected.
Remember when R.J. Reynolds bought Nabisco?
Exactly. So who knows what the future holds for God?
One thing's for sure, they're not afraid to innovate.
And adapt to the changing times.
Well said. But before we get too carried away with our brainstorming here, we got to remind our listeners that this is all purely hypothetical and for entertainment purposes only.
This is not investment advice.
We're not saying BAT is actually going to do any of these things.
Nope, we're just having some fun exploring the possibilities.
But hey, if any BAT executives are listening,
yeah,
we're available for consulting gigs. You know where to find us.
Okay, I think it's time to wrap up this is not financial advice segment with a friendly reminder that investing in the stock market always involves risks.
Do your research. Talk to a professional.
Make informed decisions.
And remember, while we had fun with those crazy ideas, smoking is harmful and addictive, and we're not endorsing or glorifying tobacco use in any way.
Absolutely. We're just analyzing Batty's business strategy and trying to understand the potential impact of their actions.
And trying to keep it entertaining.
Of course.
Okay, I think it's time to move on to the next part of our deep dive, where we'll dig into Batty's financial performance in more detail.
Sounds good. Let's break down their revenue by region, their profitability, all that good stuff.
Stay tuned, folks. We're just getting started.
Okay, so let's dive into their financials a bit deeper, shall we? Starting with their revenue breakdown by region. It's actually pretty interesting to see how their performance stacks up across the globe.
All right, let's start with the U.S. Since we were just talking about it, I know they've had some rough patches there, but we also mentioned some signs of recovery. What does the revenue picture look like in the U.S. specifically?
Well, their U.S. revenue actually declined by 3.4% in 2024.
A decline.
Not great. But there's more to the story than just that number. This decline was largely due to all those restructuring efforts they've been doing.
Restructuring? That sounds pretty intense. What exactly did they do?
They basically overhauled a lot of their U.S. operations.
Okay, like what?
Expanded their distribution network, invested heavily in their brands, and focused on grabbing back market share in some key segments.
So they're playing the long game.
Exactly.
And are these efforts starting to pay off? They mentioned something about stabilizing their volume and value share.
Yeah, those are definitely positive signs. It suggests that their strategy is, headed in the right direction.
So there's hope for a turnaround.
Oh, yeah. They're even projecting a return to growth in the U.S. in 2025.
That's good to hear.
Yeah.
But the U.S. is just one piece of the puzzle, right? What about their performance in other regions? How are things looking globally?
Well, their AME region, that's Americas and Sub-Saharan Africa, that continued to show really strong performance, almost 5% revenue growth.
AME. Okay. And that's a big chunk of their business.
It's a key growth driver for them, for sure, especially because it includes a lot of emerging markets with, higher smoking rates.
Yeah, that makes sense. So they're doing well in emerging markets.
Hmm.
What about their APMEA region? That's Asia Pacific and Middle East, right?
Yep, that's right. And their APMEA region delivered a solid 5.4% revenue growth.
Solid. Okay. What's driving that growth?
Mostly strong pricing and new category growth in those emerging markets.
Didn't they mention some issues in Australia?
Ah, you remember that.
Of course. And weren't there some other hiccups in that region too?
Yeah, they definitely faced some headwinds in Australia because of those new tobacco regulations we discussed.
Right. Yeah.
And then on top of that, they had some supply chain disruptions in Sudan.
So a bit of a mixed bag in the APMEA region.
Yeah, I'd say so. Strong growth in some spots, but also some challenges to, navigate.
Sounds like BA has a lot to juggle globally.
Running a global business is never easy, especially in an industry as complex as tobacco. But their diversified product portfolio, with both combustible and new category products, that definitely helps them weather the storms.
That diversification is key. So let's zoom in on their new category performance. We touched on some highlights earlier, but I'd love to get into the nitty-gritty.
Sure, let's break it down by category. So their vapor category, which includes products like Vuse and Vipe, actually saw a decline in revenue, about 2.5%.
A decline. Wow, I'm surprised by that. Given how popular vaping is, what's causing that downward trend?
The main culprits are the issues they're having in the US and Canada.
Illegal market stuff.
Exactly.
Yeah.
It's a super competitive market, and that illicit market is eating away at their share.
Yeah, that makes sense. It's hard to compete with legal products.
Yeah.
But even with these challenges, they seem pretty optimistic about vaping in the long run, right?
Yeah, they believe that as regulations get clearer and enforcement gets tougher, the legal market will eventually win out.
Fingers crossed. So they're not giving up on vaping.
Not at all. They're actually doubling down on their premium offerings, which they think will attract, a more sophisticated customer.
Premiumization. That seems to be a theme for them.
It's a strategy they're using across multiple categories. What about heated tobacco? How's that category performing for them?
Yeah, let's talk about that.
Their heated tobacco category, which is mainly driven by the Glow brand, that grew by almost 6% in 2024.
6%, not bad. And they're expecting even more growth with that new glow-heelow platform, right?
Yep, exactly. They're betting big on glow-heelow, especially in the US.
We'll see if it lives up to the hype.
Yeah.
Now let's move on to the star of the show, modern oral. Velo, right? That's the one that's been killing it.
Modern oral was the clear winner in 2024, no doubt about it. Revenue skyrocketed by a crazy 53%.
53%, that's insane. What's fueling that kind of growth?
It's the continued global expansion of their Velo brand, plus the strong early performance of Velo Plus in the US.
So their focus on modern oral is definitely paying off. Do they think this growth is sustainable?
They seem to think so. They see modern oral as a major part of their future growth, and they're putting a lot of resources into expanding its reach and developing new products in that category.
Sounds like they found a winning formula there. It'll be interesting to see how that category develops over the next few years. Now let's shift gears a bit and talk about profitability. They mentioned some key metrics earlier, but I'd love to dig a little deeper. How profitable are they really?
Sure. So their adjusted operating profit grew by 1.4% in 2024.
Okay, not bad. And their adjusted operating margin.
That remained flat.
So steady profitability, even with all the challenges they're facing, like inflation, supply chain issues, and increased competition. How are they managing to stay profitable amidst all that?
Well, they've been very proactive about cutting costs.
Like what kind of cost-cutting measures?
They've got this robust cost-saving program in place, and they're on track to save over 1.2 billion round by the end of this year.
1.2 billion. That's a lot of money. What are they doing to achieve those savings?
They're simplifying their combustible operations, driving scale benefits in new categories, streamlining their global supply chain, and being smarter about their marketing spend.
So they're tightening their belts across the board.
Pretty much, they're leaving no stone unturned, and they're actually aiming for an additional 2 billion pounds in savings by 2030.
Wow, that's a bold goal. But is it realistic?
They seem to think so. They believe it's achievable if they keep focusing on operational excellence and innovation.
Makes sense.
Yeah.
Those cost savings are key to freeing up cash to invest in those new categories and maintain their profitability as they transition away from traditional cigarettes.
Exactly. It's all about balancing the present and the future. Speaking of which, let's talk about their capital allocation strategy. They mentioned dividends and share buybacks earlier. What's the latest on that front?
Yeah, I'm curious to hear more about that. Are they still committed to returning cash to shareholders, even with all the investments they're making?
They've actually reaffirmed their commitment to both dividends and share buybacks, which is good news for investors.
Okay, good to know.
They just finished a $700 million share buyback, and they've announced another one for $900 million this year.
Wow, that's a lot of money going back to shareholders. Why are they doing that?
It basically shows how confident they are in their ability to generate strong cash flow.
And in their future, I guess.
Exactly. They believe that returning cash to shareholders is a way to increase shareholder value and maintain financial flexibility.
So it's a way to keep investors happy while also investing in growth.
Precisely. It's a balancing act.
Speaking of balancing acts, they're also investing heavily in growth initiatives, right? How are they managing all these priorities?
Their capital allocation strategy is all about finding that sweet spot between investing for the future, paying down debt, and rewarding shareholders. They're trying to strike a balance that supports long-term growth while also delivering value to investors today.
Sounds like a smart approach. It's all about managing the present while keeping an eye on the future. It seems like they have a lot of moving parts in their business.
They do. They're juggling global operations, a diverse product portfolio, and a constantly changing regulatory landscape. It's a lot to handle.
So exciting, right?
Definitely. It's a challenging but also incredibly dynamic industry. They're at a crucial moment in their history, and the decisions they make now will have a huge impact on their future.
It's a fascinating story to follow. They're facing headwinds, but they're also seizing opportunities. They're adapting, innovating, and transforming their business to thrive in a world that's changing faster than ever.
I agree. It's a story of resilience, ambition, and transformation. And we've only just scratched the surface.
There's always more to explore. Well, that wraps up this section of our deep dive. We've covered their regional revenue, their profitability, their capital allocation strategy, all the financial heavy lifting. But we're not done yet.
There's still more to uncover. Next, we'll delve into some of the less tangible aspects of their business, like their sustainability initiatives, their ESG performance, and their commitment to building a more responsible and inclusive company.
Stay tuned, folks. The deep dive continues. Okay, so we've crunched the numbers, looked at their global reach, all that good stuff. But now, I'm kind of curious about the bigger picture. Beyond profits, beyond products, what's Bait doing to, deal with all this talk about corporate responsibility and sustainability? It's a big deal these days.
Yeah, for sure. It's something investors are really paying attention to. And Bait, they're actually pretty proactive on this front. They've made sustainability a core part of their business strategy.
So it's not just a PR stunt for them.
No, it's woven into how they operate. They're focused on things like environmental impact, social responsibility, good governance, you name it.
Okay, so it's a real deal. Give me some specifics. What are some of their sustainability initiatives?
Well, they've set some pretty ambitious targets for reducing their carbon footprint. For one,
How ambitious are we talking?
they're aiming for carbon neutrality across their own operations by 2030
Okay,
and net zero emissions across their entire value chain by 2050.
that's a pretty big goal.
Okay.
How are they planning to pull that off?
They're investing in renewable energy, improving energy efficiency at their facilities, working with suppliers to reduce emissions throughout the supply chain.
Sounds pretty comprehensive.
They're even exploring some cutting-edge stuff like carbon capture and storage.
So they're going all in on the environmental front.
Hmm.
What about social responsibility? What's happening on that side of things?
They're really focused on human rights, labor standards, community engagement, all that.
Okay, good stuff. Give me some examples.
They've got a strict supplier code of conduct to make sure they're sourcing ethically and using fair labor practices.
That's important.
Absolutely. And they're investing in programs to help tobacco farmers and their communities.
To help them transition to more sustainable ways of making a living.
Exactly.
That's great to hear. So it's not just about protecting the environment. It's about treating people right and having a positive impact on the communities where they operate. What about governance? What does that involve for a company like BAT?
Governance is all about transparency, accountability, making ethical decisions, that sort of thing. BT's got a really solid corporate governance framework in place.
Give me an example.
Well, they have a diverse and independent board of directors.
Okay, that's good.
Plus, they're committed to ethical marketing practices and responsible lobbying efforts.
So they're hitting all the bases.
Mm-hmm.
Environmental, social, and governance. It sounds like they're taking sustainability seriously. But how do we know it's not just lip service? Are they actually making a difference?
That's the question, isn't it? Anyone can talk a good game, but BT's actually pretty transparent about their progress.
How so?
They publish detailed sustainability reports, track their performance against their targets, the whole 9 yards.
So they're putting their money where their mouth is.
Exactly. And that's something investors are increasingly demanding. Companies that can show a real commitment to sustainability, they're more likely to attract investment and build trust with consumers.
Makes sense. People want to support companies that are doing the right thing. It's not just about the bottom line anymore. It's about values.
That's right. More and more companies are realizing that sustainability isn't just a nice bonus, it's essential for business. It's about creating long-term value for everyone involved. Shareholders, employees, customers, communities, the planet, you name it.
Well said. It's encouraging to see companies like BAT stepping up and taking responsibility. It gives me hope for the future,
Me too. It's a sign that things are changing for the better, that businesses are starting to embrace a more sustainable and equitable way of doing things.
Well, I think we've pretty much covered everything in this deep dive into BAT's business. So we've gone through their financial performance, their new category strategy, their global operations, the legal stuff, the regulatory stuff, their sustainability initiatives. It's been a pretty thorough exploration, wouldn't you say?
Absolutely. We've gotten a real deep understanding of where BAT stands today, what their goals are, what challenges they're facing, what opportunities are out there. It's a complex story, but a fascinating one.
So before we wrap things up completely, let's leave our listeners with something to think about. Given everything we've discussed, what do you think the future holds for Betty? What are the keys to their long-term success?
That's a great question. I think a few things are crucial for Batty going forward. First, they got to keep nailing that transition to new categories.
Yeah, we talked about that.
They're on the right track, but the competition is intense.
They can't afford to slow down.
Exactly. They need to stay ahead of the game when it comes to innovation and developing new products.
New categories are key. Got it.
Yeah.
What else?
Second, they got to navigate this crazy regulatory landscape.
Tobacco and nicotine, super regulated.
It's a minefield. They need to be flexible, adaptable, always one step ahead to stay compliant and, well, stay in business.
Regulation, that's a big one. Anything else?
Third, they got to keep building trust with consumers and everyone else involved.
Yeah, trust is huge, especially for a tobacco company.
They've made some progress on sustainability and responsibility, but they got to keep pushing, keep showing that they're serious about ethical and sustainable business practices.
Actions speak louder than words.
Yeah.
So what's your overall take on Beatty's future? Are you optimistic?
I think they've got a lot going for them. They're a global leader, strong brand, diverse portfolio, committed to innovation, but they got to stay focused, adaptable, responsible. That's the recipe for success in this industry.
Well said. It's definitely a company to watch. We'll be keeping an eye on them, that's for sure. And that brings us to the end of our deep dive into British American tobacco. Thanks for joining us.
It's been a pleasure.
As always, this is not financial advice. Do your own research, talk to a professional, all that good stuff.
Make informed decisions.
And remember, while we had some fun brainstorming those crazy ideas earlier, smoking is harmful and addictive.
Absolutely.
We're not endorsing tobacco use in any way.
Just trying to understand the business and keep things interesting for our listeners.
That's right. Thanks again for tuning in to the Deep Dive. We'll be back soon with another deep dive into a fascinating company or industry.
Until then, stay curious.
And keep learning.